Much. The reemergence of the retail investor has been made possible by the lightning-fast way stocks can be traded today from just about anywhere. Our next guest is considered a pioneer in the electronic trading space. Kyle Zasky co-founded Edge Trade. He sold it to Knight in 2008, now a partner at the investment firm SenaHill's. Welcome. It's good to see you again.
Good to see you. Happy to be back on.
Yeah, you know, you 20 years ago when we first met were at that time really shaking up the landscape for the retail investor then. Now we're in the midst of what I truly believe is a renaissance. What do you think about as you're watching all of this unfold?
Yeah, look, it's exciting to watch. I know there's a lot of vested interest here and a lot of hyperbole, and I think the net opinion that I have is, number one, it's very good for more participants to be in the market than less. I think sort of like the on-ramp to participation and sort of all the talk about Robinhood in particular and whether that's good or bad. I think what may be lost in the conversation, and this is where my work at SenaHill's is a lot more relevant, is there's been enormous progress the last 5, 6, 7 years in terms of engaging with retail investors through financial technology. There are a lot of apps, savings apps, investing apps out there that are not specifically about encouraging day trading, if you will. I know that's sort of my pedigree and my past from the 90s. But when I think about the companies that are out there right now, you could be 18, 19, 20 years old. You could start investing with $5 or $10 or $20 through companies like Stash Invest and Acorns, companies that really try to encourage disciplined, regular investing and dollar cost averaging and investing in themes and ETFs that are important to you. And that kind of inclusion is extremely important for capitalism. And when I think about this, and I'll pause in a second so I don't just keep talking in a run-on sentence here, I think what's most important, you know, this kind of topic of sort of the wealth inequality in this country and the impact that it has on our country and on the world. One practical way to help tackle that is to have more inclusion in financial markets. Let's make our society an ownership society rather than just, you know, the 1% or 5% being engaged in markets. So I think, you know, that kind of forest from the trees kind of gets lost when we think about what's happened in the last week with the short squeeze, but there's so much good stuff happening, and I think it gets lost in the conversation.
I'm glad you make that point. And I mean, the fact is, and you allude to this as well, it's just never been easier or cheaper for the regular person trader to get involved in the stock market. It's really as simple as Ja Rule put it within the last hour. Robinhood, in his words, put the stock market in your pocket. That has literally been what's happened. It has opened it up to an entirely new universe of people.
That's correct. But I think we do need to parse, because I know there's a lot of conversation about, should we be doing more to protect these individuals from themselves? Should we stop them from trading? I think that kind of rhetoric has to go away. I think people should be allowed to speculate if they want. They should be allowed to buy stocks and sell it a few moments later for a profit. They can have any sort of perspective they want to participate. I just don't think that necessarily Robinhood should be the top of mind as the only mechanism, that they're the trailblazer that did something like this. I think encouraging people to invest for the first time is probably more important than encouraging people to trade for the first time. And look, I made my money starting a day trading company, so I don't want to sort of, you know, be the hypocrite here. But from a day trading perspective, I think statistics show it's really, for the most part, a losing proposition for most people. And I think the conversation should really evolve more to, how do you create better habits for participating in the markets? And that's not really through Robinhood. That's through a lot of different apps and saving apps and financial management systems out there that are really helping anyone for as little as $5 or $10 to start participating and learning. It's fantastic. Somebody used the word renaissance. It's been happening for probably like the last 7 or 8 years, and we've had tens of millions of new accounts at these kind of companies. It's fantastic.